My name is Lisa Alley with Summit Lending, and I'm here to discuss 6 common misconceptions with reverse mortgages. You've heard them all. It's a scam. The bank takes your house. Don't do it unless you're desperate. But here's the truth about reverse mortgages. They were created specifically for seniors to give them another option to help improve their finances in retirement. And over the years, more and more protections have been put in place that make today's reverse mortgages safer than ever. The home equity conversion mortgage, also known as a HECM, but more commonly known as a reverse mortgage, it's going to allow homeowners aged 62 and older to access the equity in their homes to help improve cash flow and increase the longevity of their retirement assets. HECM loans are insured by the Federal Housing Administration, and all borrowers must get independent counseling to make sure they understand their responsibilities and get their questions answered. Helps you separate fact from myth regarding reverse mortgages. I've compiled the following list to help you understand the program as it stands today. So the first myth number 1, is the lender or the government, they're going to take my house. That's just plain false. With a reverse mortgage, you or your estate continue to retain control of your family's title, as with any loan, including a conventional forward mortgage. The lender simply puts a lien on title to ensure the loan gets repaid. Myth number 2, my heirs will be responsible for repaying the loan. Also false. A reverse mortgage is a type of loan called a non-recourse loan. This means that the lender can only get repaid from the proceeds of the property, with the sale of the remaining proceeds going to your heirs. If the loan balance is higher than your home's value, then the heirs are not liable for paying the difference, which leads to myth number 3. I'll have nothing left to leave my kids. Also not necessarily true. As home values continue to increase, the value of your home will continue to appreciate through your lifetime. True, interest will accrue on the outstanding loan amount and be added to the balance, but the difference between the two is retained equity and is what you will be able to leave your kids or your heirs. They have the option to arrange to repay the loan at that time or buy the home if they wish to keep it in the family, or they can sell it and simply pay the reverse off. Myth 4, I won't be able to sell my home. A reverse mortgage is just like any other loan. If you sell your home, that reverse mortgage will be paid off. At closing, there's no prepayment penalties, nothing, just paid off the loan. Myth number 5, I'm afraid my spouse will be kicked out of the house if I pass away. The Department of Housing and Urban Development have put additional protections in place to keep this from happening. Eligible non-borrowing spouses can remain in the home if the borrower's spouse has to move into a nursing home or passes away, as long as they continue to meet the terms of the loan. Myth number 6, I may need more cash flow, but I'm not desperate. A reverse mortgage is much more than a last resort. More and more financial planners are advising that it can be a flexible financial tool for retirement planning. You can choose to take the proceeds of a reverse mortgage in a lump sum, in monthly payments, a line of credit, or a combination of the 3. A reverse mortgage is about unlocking financial freedom in retirement. It starts with a proactive approach to financial planning. While it's not for everyone, many seniors, a reverse mortgage can be a useful part of their retirement plan. Thank you very much.